Welcome back to Ferocious Education. This is Ed. Today we're talking about CTRM, Castor Maritime. I've done a video on this one before, but this one is an update, so make sure to watch the previous one if you would like, and let's jump right into this one. So, Castor Time, covered this one again, and there's a couple of things I do want to cover today, including their recent financials and as well their price over book value and fundamentals. These are really important when evaluating such stock, and we're going to give a lot of emphasis today on technical analysis. So on CTRM, first things first is we need to take a look into the latest institutional buyers. Institutional buyers don't seem to be much different from what we've seen in February with millions of shares being added back into February. Nothing going on in March really that is significant in that sense. And we can move on towards the latest SEC filings. The latest SEC filing talks about an exercisable 65-cent per common share warrants that has a term of 5 years, and there's around almost 200 million warrants in that sense. And this raises an extra money for the company itself. Now, the maximum proposed price is 65 cents. It would raise around 125 million for common share, and then additional 125 million related to underlying warrants, concluding around $250 million total. Now, in the senses of the latest news, they already had $125 million of direct offering, so the warrants are still exercisable, but $125 million would go back towards the cash prospect. Now, just keeping in mind, this one did raise multiple times more offerings and more offerings. So you look at $125 million in April 5th, and you go back further down to January 22nd to a $15.3 million debt financing, which is actually good. It's not offering really. On January 8th, you're looking at $26 million. That was raised from December 31st, another offering at $18 million as well. And we go back further, you'll find more offerings and more offerings. The reason is vessels depreciate in value faster than you can really raise money at that time. 17.3 million. So this is one of the biggest offerings they've made since the last quarter. And this is almost year to year. And what that makes it here is that a couple of things you need to take a look at. The price over book. Now, I'm pretty sure this is not actually reflecting the current outstanding shares. So the price over book might actually increase a little because you will have more outstanding shares, and market cap is nothing more than the price point multiplied by the outstanding shares. So we'll get a more accurate price over book coming relating towards the most recent quarter, the next quarter. So the 129 is not as accurate as I would like it to be. We're probably hovering somewhere around 2, given that the current outstandings are around 707 at around 125 million shares. So we're probably looking at $250 million shares, roughly around there. Let's say 200 million. So your outstanding shares would be somewhere around 900 million. And so your market cap versus price point would be looking at 2 to 3 in terms of price book. The current SP 500 average is around 432, 437, so it still technically has some room to grow on the price over book. Now, other things I want to look at today is just the general news on the SEC filings, and it looks like they don't have much given there, so we can wrap up this video into a quick video here and move on towards technical analysis. And keep in mind here, this news here announcing the pricing of $125 million registered direct offering, it's around 200 million shares as I did talk about. So current general outstanding shares would be around closer to 900 million. So let's jump right into technical analysis now. On a 1 week perspective here, on the technical analysis, we see that things are slipping down on the MACD. It's actually gone towards negative, and that's a dangerous thing. However, Williams percent R, or the RSI, shows that it's highly oversold, which means a correction would perhaps give us a bounce here. In terms of momentum, things are looking not as good as we would hope, so it's actually approaching zero momentum or negative momentum. Currently, 30 EMA is above 10 SMA, and the moving averages do look bearish. The ADX doesn't suggest that there's any bullish trend. However, on the MACD, on a 1 day perspective, things are looking a little bit better on the MACD. It looks like it's going to be attempting a positive reversal. Now, the question is whether next week it will actually see that positive reversal or will it reject it. Now, currently on the Williams percent R, it's also highly oversold, and the 10 SMA is above 30 EMA. That's a bullish thing. But the trading action zone there is between the 79 cents and the 69 cents. If it manages reaching in there, it might escalate forwards and push itself up north. Now, the moving average band is between currently 90 on the top, 73 on the bottom. But the Bollinger Bands are between 114 at the top and 49 at the bottom. Currently, it looks like there's more of a selling trend, although volumes have begun to pick up. Stochastic Fast and Stochastic Slow are both telling you, look into the next support and resistance, because it might actually bounce back. Currently, it has a very strong Fibonacci resistance at 54 cents. Following that, 81 cents, 103, 125, 156, and 195. Current price line actions. You're looking at a very strong support sitting somewhere around the 43 cents, 34 cents, and then the 27 cents, and then following that the 17 cents. Significant resistances, a very strong one at the 56 cents level, 66, looking at 73, 90 cents, you're jumping up to 105, and then upwards to 110 and 139, and upwards to 159. Comes to the question to Ed, what do you think about this one? There's definitely been a lot of speculations regarding this one, but there's one thing that I know, is that they will continue raising more money. Even if they have enough, they will still continue raising it because they want to buy more vessels. The reason why they're public is not just as they want to be a public company, it's rather that this is a source of financing for them. And so I expect for them to keep on diluting and diluting and diluting. Now, don't get me wrong. I wish for the stock to go up to $3, $4, $5. I don't care. The more the merrier. But I think it might actually be dropping back towards the current levels around, I'd say, 42 cents, etc. And we're looking for accumulation before you consider investing in. That's a key point to look at. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like. Have a wonderful day. And a quick thing here, if you've stayed this long in the video, I would love to invite you to my Discord server. It's in the description below. It's totally free. What we do here is sometimes pick long-term swings, long-term positions, swings, etc. We do scalps as well during the day. It's totally free. It's more of just trade ideas in general. And we also trade together here in Trading Floor. We have also chats during the week to discuss our trading sessions, strategies, etc. Feel free to join us. There's no obligations there, and have a wonderful day.